Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. My name is Nur Lailatul Amira binti Ma'zur. My matrix number is 23DIB20F1035. I would like to introduce my group members, which is the sweetest one is Nurin Akila binti Cian, and the pretty one is Izzatul Jannah binti Cik Kamaruddin, and the cute one is Anis Shakira binti Abdul Aziz. Okay, let me go first with the concept Islamic Unit Trust. Okay, Islamic Unit Trust as a Sharia fund, a group of specialized collective investment fund which offer investors the opportunity to invest a diversified portfolio of security. It also managed and selected by professional portfolio manager in accordance to Sharia principle. Beginning mid-1990, the fund management sector has become an attractive industry where investment opportunities have increased choices available for investors. The term Islamic Investment Fund means a joint pool where the investor contribute their money for purpose of investment to earn halal profit in accordance with Sharia.
Assalamualaikum warahmatullahi wabarakatuh. My name is Izzatul Jannah binti Cik Kamaruddin. My matrix number 23DIB20F1005. Next, I will present about differences between closed end fund and open end fund. In this presentation, have three differences between closed end fund and open end fund, that is feature, character, trading, and price. First differences is feature. Open end fund is a collective investment which can issue and redeem units at any time, for example, unit trust, while closed end fund is a company that is investment company structure where the company will issue shares for subscription, for example, share and stock. Next, in open-end fund, an investor can purchase units in such fund directly from the unit trust company or through authorized agent, that is individual or bank, while closed-end fund is another type of collective investment but with a limited number of units.
Assalamualaikum and hi, my name is Nurin Akila binti Cian, matrix number 23DIB20F1004. So now I will continue my group's presentation in topic of difference between open end fund and closed end fund. So what we have here is different in character. In open end fund, it is referred to a fund manager that makes offer to the public and invest the proceeds in a group of assets in accordance with the fund objective. Meanwhile, in closed-end fund, it is referred to a fund with a fixed number of unit outstanding and one which does not redeem units as open-end fund. So, closed-end fund is behave more like stock. Next, it is different in trading. In open-end fund, it is buying and selling through a unit trust company, but different with closed-end fund that buying and selling take place in secondary market, in example, stock exchange. Lastly, the price in open-end fund, it is computed on a daily basis by number of unit outstanding, which means that fund total assets minus liability. But compared to closed-end fund, which that share is determined entirely by market demand, often higher or lower than the NAV per share. NAV here is stand for net asset value. So next slide, we have drawback unit. In this topic, my group will talk about advantage and disadvantage of unit trust, where we have 3 points of disadvantage. There is no change in holding and only one way to buy, also high fees. While advantage, we have point of diversification, record keeping services, affordability, and high liquidity.
Assalamualaikum warahmatullahi wabarakatuh. My name is Anis Shakira binti Abdul Aziz. My matrix 23DIB20F1007.
Drawback unit. Advantage of unit trust. First,
diversification. Many investors lack sufficient resources to establish an adequate diversification on their own. Funds with variety of objectives and different types of funds are created for different investment objectives. Secondly, record keeping services. The management company maintain and administer the record of shareholder activity for a given year. This is a great convenience for the investor. Thirdly, affordability. A small amount of money is needed to participate in portfolio of investment, which enjoy the same benefit in the direct investment, which require large of amount capital. And the last advantage of unit trust, high liquidity. Unit trust can be bought and sold easily. Thus, they do not suffer from liquidity risk.
Next, I will present to you guys the disadvantage of unit trusts. Unit trusts are investment products that are often grouped together with exchange-traded funds and mutual funds. However, there are important differences between these asset classes, and some of those differences highlight disadvantage of unit trusts that investors need to know. Firstly, no change in holdings. One of the most obvious differences between, say, an actively managed mutual fund and a unit trust could be one of the biggest disadvantages of the latter. Once a unit trust is formed, its underlying holdings remain the same through the termination dates. That's an advantage if those holdings perform well, but if they drop in value, the trust investor is left holding a bag full of laggards and will lose money. Actively managed funds can trade in and out of various holdings. Unit trusts cannot, and that exposes investors to potential risks. Secondly, only one way to buy. With individual stocks and exchange-traded funds, investors have myriad ways to purchase these securities. The investor can buy them through dozens and brokerage firms. It's only a matter for how much the investor is willing to pay in commissions. Unit trusts do not offer that level of convenience. These investments must be purchased directly from the trust issuer. Purchase pricing is not competitive, and that's another disadvantage for investors. Lastly is high fees. Investors need to remember that although they are not paying for active management with unit trusts, fees associated with these products are comparable to mutual funds loans. The disadvantage here is that these fees are often far higher than what an investor will find with the passively managed index fund or an exchange-traded fund. The higher the fees, the bigger they are bought out of the investor's returns over time.
Okay, what is unit trust? What is exchange-traded fund? Okay, let me tell you. Unit trusts have investment objectives. Sorry for my mouth is really sick, but we continue it. Investment objective is like you have something that you put it your target and then you achieve it. And it also buy and sell transaction. It have buy and sell transaction. It costs to invest and minimum invest amount. Okay. And unit trust is continuous trading and pricing through the trading day. What about exchange trade fund? Exchange trade fund it have prospectus. Prospectus is document like Bursa Malaysia. They have document to offer you to invest to them. And it can be purchased online. You can go to website Bursa Malaysia and redemption charge for withdrawals. Possible to view underlying securities, and it also possible to receive dividends. Okay, next. Okay, I see unit trust. Unit trust is buy securities in a portfolio, which is itself to investment as share in the trust. Okay, the unit trust pass along capital gains, interest income, and dividends directly to shareholder. A unit trust sounds like a mutual fund, but it is not. Okay, unlike a mutual fund, a unit trust doesn't actively participate in buying and selling, has lower annual operating expenses than a mutual fund. Instead, it buys a set basket of securities, and it is investors share in profit, income, and loss. You can invest in unit trust directly through a unit trust, through the unit trust management company, or directly through a broker or financial advisor. Thank you so much. That's all from me.
What is exchange rate fund? An ETF is a security that trades on an exchange, like a stock. An ETF trades an index funds, commodity, or a group of stocks. So, rather than a set bucket of investment, like a unit trust, an ETF typically holds in dynamically changing bag of investment. There are many ETF to choose from, depending on your investment objective. The main benefit of investing in an ETF is that it gives you a chance to invest in a basket of security for a fraction of the cost. For example, the PowerShare Dynamic Industry ETF gives you an opportunity to invest in a basket of companies within the same industry, such as pharmaceutical. One of the most popular group of ETF is the Standard & Poor's Depository Receipt or SPDR ETF. Examples within this group are the SPDR S&P 500 Index, the SPDR Dow Jones Industrial Average ETF, SPDR Gold Share, and SPDR Barclays Capital High Yield Bond ETF. Unit Trust vs Exchange Trade Fund. Investment of objective for ETF. First, passively managed. Secondly, designed to follow performance of an index. And thirdly, not active selection of underlying security and return made by ETF fund manager. And the last one, ETF fund manager will closely follow performance of its benchmark index. For unit trust, actively manage. And secondly, investor pay fund manager to select stock for other security in order to outperform a selected index. And the last one, for investment objective for unit trust, performance of unit trust fund depends on the fund manager skill and the supporting structure provided by the fund management company. And for buy and sell transaction for exchange trade fund, list and quote on the stock exchange. And ETF are bought and sold like stock through the trading day. Buy and sell transaction for unit trust. Buy and sell via agents working for a fund management company or through institutional unit trust agents such as banks. And the last one, purchase or redeem are done at a single price at the end of a trading day, as the price of units in a fund depends on the closing price of its components.
So now I will present about unit trust versus exchange trade fund. What we have here is comparison in cost to invest. In exchange trade fund, there is brokerage fee, clearing fee, and stamp duty. It is similar to trading shares. Therefore, the annual management fee usually is less than 1% of the fund's NAV. NAV stands for net asset value. Meanwhile, in unit trust, cost to invest is usually imposed an upfront sales fee between 3% to 5%. In unit trust, it is also both funds typically levy a backhand charge or exit fee which investors pay when they redeem the fund. In addition, fund annual management fee can be between 0.75% to 5% per annum, which means per year of the fund's NAV, net asset value. Next comparison is minimum investment amount in exchange trade fund and unit trust. Exchange trade fund did not require an initial minimum investment amount, compared to unit trust that require an initial minimum investment of 1,000 Malaysia ringgit. Also, subsequent investment are lower, typical 100 Malaysia ringgit. Next page, we continue the unit trust versus exchange unit trust question. First, did exchange trade fund continuous trading and pricing throughout the trading day? The answer is yes. Next, the answer is no for unit trust because unit trusts are not actively traded, meaning that securities are not bought or sold unless there's a change in the underlying investment, such as corporate merger or bankruptcy. Second question, does prospectus available in exchange trade fund and unit trust? Yes, it is available in both of them. After that, did exchange trade fund and unit trust can be purchased online? The answer is yes, both of them can be purchased online. So next question, did redemption charge for withdrawals? So in unit trust, the answer is yes, but in exchange trade fund, the answer is no because basically a redemption fee is a fee charged to an investor when shares are sold from a fund. This fee, also known as an exit fee, marketing timing fee, or short-term trading fee, is charged by the fund company and then added back to the fund. Typically, it only applies when shares are sold within a specific time frame. So, in exchange trade fund case, it's one of the benefits of investing in ETF. Exchange trade fund is that load fees do not apply. No matter how much intraday trading takes place, redemption fee, like mutual funds, some ETF may be subject to short-term trading fees if they're held for less than a specific period, such as 30 days. And next, did exchange trade fund and unit trust possible to view the underlying securities? So the answer in exchange trade fund is yes, but for the unit trust is no. What I can say here is that ETF offer investors transparent, flexible, liquid, and cost-effective access to a virtual any asset class. A physical-based ETF, exchange trade fund, generally buys all of the securities in the underlying index and holds them as fund assets. Physical-based ETF offer investor best-in-class transparency. You know what you own at that time, at any time. But for unit trust, is vice versa. Last question, it is possible to receive dividends, so the answer for both of them is yes. Okay, that's all from us. Thank you.